Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, May 12th, 2022. Video number 2 for the day. And again, just to reiterate, I'll be out of town tomorrow through all of next week, posting updates whenever I can. Get them out to you. Might be end of the day stuff. We'll see. We'll see what when things are like over there. Alrighty, I'm going to go over the charts one more time and show you again and kind of reiterate what I did. I pivoted. I told you this morning in pre-market, started to cover and took some longs and ended up now I am net long. Closed out just about all shorts, index or stock related, and going long. And I'll give you my thoughts here. All right, so we'll talk about that rubber band analogy. The rubber band is certainly stretched. We are oversold. This is a weekly chart of QQQ. We already hit my second target earlier this week, and we're well below it now. So by that logic, support once broken, and for quite a while I've said we can go right through there with very little, if any, reaction. And as of now, that's the case. And normally, and quite possibly, this does open the door for a swift move down to my next targets. But I want to, tell you where I'm at, and also keep in mind what I do. A part of that goes into the fact I'm not going to be able to be in front of the computer for the next 6 days, 6 trading sessions until a week after next. That's when I'll be back on my desk. All right, to measure it out for you, just down to that the next target here. I have horizontal support around, give or take 268.30. So if I grab about where we are, roughly the bottom of that candle there, measure down for you, that tells me that if we don't snap back soon, we've got about another 6% downside to that's hit. Or if we were to go down quickly, and it's in the next day or two here, by tomorrow, let's say end of day or a Monday, a gap down somewhere, we're talking about 11% or so to that yellow uptrend line. And that also, the yellow uptrend line, which may come into play. The way that it's going to work at some point, we may get, and this may be it, a capitulation type selling. Now you won't know, you only know in hindsight. Typically you look for a selling climax, a pretty big surge in volume, and then obviously a reversal. And sometimes you get it on an intraday reversal. Sometimes you park at the close, a big red candle, and the next day you put in a bullish engulfing or a big green candle. Quite often it'll happen intraday where you're down really big, at or even below support, only to see the markets ramp up. So I think that's still a scenario. And again, being that here's the way I look at it: the Qs, the Nasdaq 100 is down from the highs, which we put in back in November, all the way back here. That's when we peaked. We are down 30 over a little hair over 30%. And I've caught all that as a trend trade and quite a bit more as swing trade, gaming, bounces and all that, and reshorting back to bounce back to resistance. So here's the way I look at it. I measure these targets from the high. To my next target here, there will be about a 34% drop from the high. So again, how I calculate there, whatever, close enough. So look at the downside's not that much, and so I look at everything risk reward. If we snap back, and let's say I'm not around to get it, let's say I get whipped out, let's say I reverse, you've got to be in front of the computer to quickly adjust. I pivot, and I told you before, I'll pivot. I could pivot by the end of this video and be short again, but I doubt it. If I knew I'd be able to trade all day tomorrow and I thought I needed to pivot, I would do that. But at this point in time, I'm accumulating longs and more so selectively as well. I'm going to go over some additional trade ideas today, but also show you a lot of stuff's at support. And it's just from my experience, when I start seeing boom, 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 not one, but multiple things, even semi-unrelated things such as different sectors and key stocks all hitting support levels at once, that tells me, hey, a bottom is probably close. We could break the market, the rubber band could snap. We could go right through those. They may prove to be mere speed bumps on the road down to lower lows. But again, how greedy do you want to get? I've got some big profits I feel comfortable banking, and I don't mind giving a little of that back. I feel a little more comfortable, unless, I may change by the end of the day, but as of now, I still think we got a good chance to ramp it up, and maybe today. And then there's, it might not sound like a lot of time, but between from and market time, it's kind of that whole saw the movie Interstellar when they're out there, on those high gravity planets. Time is a lot different. Time's a lot different in the market because a lot can happen between now, 2:15 p.m. Eastern Time Thursday, and the 4 o'clock close tomorrow. A lot can happen. We could print back up there, and if we recover that level, especially solid recovery back above 300, that's going to be pretty darn bullish. Now, we could also tap down. We could, head on down today, go lower, hit this level tomorrow, and then we could bounce up. So again, what is that downside? Is it worth trying to capture? And there's no guarantee that that's the downside, the max downside, but that's about another 5.5%. But we could snap back in a blink of an eye, really, be back up to that 315.58, potential bounce target. That was a big level there. That's about 11.5% upside. So anyway, let me show you the levels, and again, we can sit here all day long. And the only thing you can see I've changed on this chart here, this QQQ weekly, I extended this downtrend line. That was that 60-minute, remember that 60-minute bullish falling wedge right there that popped? If you take the downtrend line from it and extend it, we now have the first back test of that. It's a low-level back test, but something worth noting because a lot of times these trend lines come into play. So that's the cues. I'm going to get to the sectors in a second. I already covered a couple key stocks like Amazon. I'm going to look at that one more time. IWM, just a hair below my second target, which was a pretty big support level, and that was a target I maintained for quite a while now, and anything's possible. That's why I gave potential T3, T4. If we can't hold it and the markets have a little, the rubber band snaps and we have that quick surge down to hit those next targets on SPY and QQQ, we'll probably come on down here. But what is that downside? Let's quantify it. So we hit that low today. We're right testing this morning's lows where I got that first post out to you in pre-market. Actually a little higher. RTY is above the lows. Everything else, Qs are testing it. You're talking about also about 6% or so down to that. So not that much, and that's even bigger resistance. Why is it bigger resistance? Look how many reactions there. We broke above it, fell back below, then back tested from below. Back tested, it was the top of this trading range here. We tried to regain it again, failed, and had that big drop down in COVID. Then we had another trading range there. Then we popped it, and we looked back. So this is we'll call that a target. Well, we'll call it what it is, target 1, target 2. They're far enough apart to have separate targets. But again, the downside, if you've milked any part of this, and this has been a great trade, we've been able to, at least I pointed out, whether you did it or not, or I did each one or not, it was pointed out there, a short entry there, objective, cover T1. That's when the SPY and QQQ hit their first targets around there. Recycle in, short bounces back to the top, another short entry on the break there. So it's been, as an active trader, even a typical swing trader, trying to catch swings that can last a few days to a few weeks, sometimes a couple months. I have different definitions: active swing trader, longer term swing trader, which kind of morphs into a trend trader. But it's been a good move down. And again, at this point in time, if you don't know what to do, because I can tell you, if the rubber band snaps, it could be a quick move down, probably over before you know it, probably hit it, and then the buy algos will go crazy buying if we hit that, and you need to reverse quick. I don't see a crash. The markets can't crash like 87 anymore. Circuit breakers will kick in. That's going to cool things down. Uptick rule prevents short sellers from wreaking havoc, and so there's no more 1987s anymore. Not that we can't get to where the market needs to go. It's just going to get there a lot slower. 87, you had a 20-something% crash in one day. And again, the circuit breakers and other implementations they put in place after that will pretty much prevent that again. Alrighty, IWM, I just covered that for you. Oh, and I didn't mention SPY, and now we're going to wrap this video up pretty quickly because I know it's you don't like the long ones during the day, especially when the market's moving fast. But I've got out charts to you. I added another chart under the comment section of the last post that's set up for the with the 10-minute charts of IWM and QQQ. Here's SPY. SPY is also cracking below the second target, but once again, I have to reiterate, this target has been and always was on the weekly chart. There's an example. We broke this key level right here a couple times on an intra-week break. Well, that one time I should say, and then when we finally close the week below it, see, there's your weekly candle. That candle doesn't finalize till 4 p.m. on Friday. Following week, we got another weekly close, and I said that was it. That was when bears won D-Day. boom. Now we're down here, or maybe D-Day was down here on the daily. I'm sorry if that was, but that was also yellow because it was a big level on the weekly chart. So that's it, guys. And again, my next target's a little more aggressive. It doesn't align with my QQQ target, and these are longer term targets. I said near term, long term, because all along, and even now, I think this is probably the initial leg down, and we'll probably get a rally in the bear market and hit these later on. So hopefully. My plan is, unless things change, and they may by the end of today, they could change by tomorrow. Hopefully I'll have Wi-Fi on the plane if I need to pivot, but I plan to be long from today, net long, especially how we close. Again, I keep saying the same thing over. I may change that. I may go neutral to cash to not have to worry, but as of now, especially if we can ramp and we get a green close today, I will certainly be going into tomorrow long. And most likely throughout next week. So if you want to keep it very simple, a stop below today's lows, especially if you see the reversal. How low depends on you. Tight stops, tighter the stop, the less you're going to lose if we break the lows, but the higher chance you have of the algos just running your stops, taking it down there and clipping it real quick and run it back up. And so that's why I like staggered stops. That's what I laid out in one of the posts that I gave you in the update on those 10-minute charts I posted earlier. I give some staggered stops, a third on RTY, and we haven't even triggered the buy signal on the 10-minute. We only have the long-term pullback to support. All right, so there it is. That's how the candles look now. We'll see how they look tomorrow. I think we land in Hawaii. I think my wife told me around 2:30 p.m. their time, which is going to be at 6 hours to that. So yeah, I might get if I can, but we still have to get to the hotel and get settled in. That's when we land. So I don't know. It's going to be late. But if I see anything big, I'll get a post out to you guys tomorrow night after I get in the hotel and get settled. Okay, here's what I wanted to show you. So when you zoom down to the world of the intraday charts, they're fast moving, they're a little bit harder to gain, and you have to define your time frame too. If you're a very active trader and you like to keep tight stops, you like to game little rips and dips, get 1%, 2. In this market, you can get 3. We had from low to high today. That was I think a good, it was a 3.84, almost a 4% pop from low to highs. But here's what happens. So if you want to use the microanalysis, which we're on right now, you had a big level here. I talked about this level yesterday. I've been talking about it recently. 12,100. We broke it, and we put in the divergence. Just continues to build. This market's just not snapping yet. The VIX still keeps pushing on that brick ceiling it has. Maybe it pops it, and if it does, it can soar. If not, then it'll go down if the market can rally. But here's what the market needs to do. It ran up there. That was resistance, and still is. We had a brief, what I call momentum fueled overshoot. Trading on this time frame, then you would need a solid 10-minute close above it, and you had just a marginal slight intra-period, or slight pop. It looks like you maybe got a close right there, a hair above it, not enough to say they clearly got taken out, and they immediately sold it. So basically, that's all that is a bounce back to and a rejection off the 1200 resistance. You have this potential wedge forming here, and there was a breakout, and you are back testing now. So this is what the bulls want to see. And if you want the easiest levels for today, if you give a pop above today's highs, now when you get this low, I'd almost be surprised if the algos didn't just pop a quick low, and it'll happen fast. Stops will be hit, volume spikes. If that happens, wait for recovery back above this level, the recent lows. That's about 11,700, and then you can go long there as an active trader. And then what you want to see is a run up to, and then a break above these recent highs, and then that should rip the market. I think you'd have an explosive rally, especially if it happens today, and we can recover those levels I give you on the weekly chart. So there's your active trading plan for active traders, and less active swing or trend traders. Just game those weekly charts and stick to your plan. The other one I gave you was RTY, and this is the chart I posted a follow-up in the comment section below. And so you still don't have the buy signal on the 10-minute chart. I said you need to take out this trend line, and then this is what I call BOD, or benefit of the doubt resistance. It's comparable to that level I just showed you on the Nasdaq 100 futures, and it was support, brief whipsaw down below, support held, finally cracked, and that breakdown stuck. That makes it a well-watched resistance levels for a level for day traders and active traders. And so now, if we can pop the trend line, some eyes are going to be watching that. That's why I call it BOD. BOD means benefit of the doubt. If I have two resistance levels in close proximity, if you want to play it safe, you wait for the latter of the two to pop, or you take a starter position on the breakout of the first one, and then you add, that's your all in there, and then your targets would be 1793 ish. I don't have a hard level here. I'm going to pull one of these lines down. Let me leave that one on there just so you can see where the levels might come into play. But again, if they can get this today, and they might not, this may all be moot, but if they can get this and pop it up here and take it especially above 1793 today, then that's going to have done some pretty constructive things on the daily and possibly even the weekly charts if that holds into Friday. And so therefore, just what I would do at that point is let those morph into trend or swing trades. If you got a good entry down here, you scaled in, just have your stops, maybe periodically ratchet them up strategically a little bit below each resistance level that's taken out, and let it run. So that's RTY. And there's a strategy. For example, if you took a trade this morning, like I did, I reversed off the recent lows. You can scale out. There's a little hair above, right around the recent low. And then in thirds, and I didn't really have room to fit them on there. Maybe those spacings would be a little wider. I don't have enough room on the bottom of this chart to draw three equally spaced lines, but again, a third, and that way if the algos try to pop it down and then run it up, and they got a 30-year position and you see the recovery, you can always get back in. But again, you don't want to, if the rubber band breaks, you don't want to sit there and hold down because there's no guarantee that if the rubber band breaks, that those next targets on the weekly I gave you are going to hold. Probably they're pretty good support levels, but there are no guarantees. So that's that. And again, one way, it's not easy to precisely time tops and bottoms. I try, I love it. Sometimes I nail it, and sometimes I'm too early, and sometimes I'm wrong. What is the difference of that between early and wrong? Nailing it's nailing it. If these lows hold today, give or take within 1% or a couple percentage points, great. I nailed it. The reversal, covered shorts, went long. Being too early, I define as, for example, Amazon. I've taken this today as a trend. So I'm starting to scale in. I have a pretty good chunk of it, but I have enough room to add more. And that was a long-term target. Laid out way back here in the beginning of the year. We had broken down. It had a sell signal. We went to, I covered all this before you. I even gave you the link to that previous post. And right here after earnings had a scenario where we either go down and hit this level or we bounce and then hit it, and it was a perfect tag. That was it. Nailed that one. The following day, that was the 4th of February, posted that we had made a back test. Had us going down to this line, right, actually to the blue uptrend line in that one. But then on the previous day, I posted multiple weekly charts, so 4 in total. And this is where, and in the follow-up post, I had us going right there to 2043.41, and that's what we hit today. That is a nice level. That's why I'm harping on this one. And the way I see it, okay, this is a stock. We all know Amazon's not going away. They've had some problems, rising fuel costs hit them, and valuations, and everyone moving money out of tech and high flyers because of the rising rates. We know what's happened, but 46%. So if you were one of those guys or gals that were just waiting to buy Amazon on a dip, said, I don't want to chase it, when do you buy it if you don't buy it down 46%? Is that guarantee? Does this guarantee it can't go lower? No. But as I covered it earlier, there's some big support down here, and if it hits that far, if it drops that far, it would be another 17%. But it's also going to mean that this stock, one of the largest companies in the world, has dropped over 55, and that's possible. guys, we're in uncharted, almost uncharted territory. This time is different from a lot of the other bear markets in recent years because you're coming off extreme valuations, and you're on facing the beginning stages of what's probably going to be the most aggressive rate hiking campaign by the Fed in modern history, at least for several decades, 4 or 5 decades. Okay, that's that. Oh, and then of course, I like to look at daily charts or 60-minute charts to kind of hone down my entries and exits. And I gave you this one, and there it is: bullish falling wedge, breakout, big green candle, back testing right now, giving you another opportunity for an entry or an add-on on the back test. And where you stop will depend on your targets. I gave you active trading targets that, if I'm right, can be hit within, I would think, the next week or so. That would be T2 19% from where we are right now if you take the back test. So let's say you buy this back test here and you're going to go for that 19.5, 20% run. Yep, that's right about 20 if I take it from where we are. All right, so I'll just round that up. 20, let's call it 21. So a 7% stop loss would give you a nice 3-to-1 RR. 7% down here is about 1956 or so, 1960 we call it. So that's how you trade. If you say, I think this is where we're going, I'm going to target that level to take profits or maybe ratchet my stops up. That can be your stop loss down there, and that gives you a 3-to-1 risk reward. And if wrong, no big deal. You just wait for the next setup. We'll get it the next time or the time after that. Okay, I got to move it along here so I can get the video out to you before the close. Sector time. Okay, so I mentioned earlier today I had Apple at support, Amazon at support, which still are, the small caps at support, the mid caps at support. Let's just go over sectors real quick. Some of these charts are a little messy. I have a lot of lines that have been left on, but I've had most of these levels here for a while. And you can see on XLK, the tech ETF, you have a major reaction high here. And really what's a support zone right there, and we're at the top of it now, and there's still the potential to put in a divergent low here if we can turn around and rally soon. This is going to mirror QQQ, so I won't spend too much time on it. XLV is healthcare sector ETF. I'm going again through the 11 sectors in the S&P 500, but you can see this is bottom this year-long or so trading range. We've had 2 false breakout attempts. We're at the bottom of the range. I do believe we're in the beginning stage of the new bull market, and that eventually we take that out. But watch, rinse, repeat. We've every time we've fell from the top to the bottom, boom, boom, boom. The next ride up is the top. Now, ultimately, this thing's going to break to the downside, and that's going to tell. And if it happens soon, hey, not good. I'm going to say that. But again, you can take a shot here at or towards the bottom of the range. And where this one actually has a little more to go. You can see we're a little bit above the bottom of the range. Bottom's about 124.18. And typically, your minimum bounce target is usually the midpoint of the range right there, about 129.50. But I just wanted to point out I was coming up to support. XLF, this one I put on as a short trade way back here, and I said you might have to give it time, and I talked about my whole early, what the difference between what I define as being early on a trade or wrong. Early is the trade pans out, it just takes a lot longer or longer than expected, whereas wrong means I was stopped out. So if it's early on a trade, it goes up, I go underwater, or maybe I stay sideways, and I already did the math on this. The percentage relative to the stop loss on this to the maximum target would have not exceeded a reasonable stop, would have kept you in the trade, so it just took a long time. We hit my first target early on, the short came on that bearish rising wedge break, hit the first target, went up, made a series of divergent highs and been stair-stepping lower, hit the first target again, which was also this range, recently broke down, now we just hit T2 today. So if they can reverse it today, park it back on, we're close enough right now. Great, then they save it and we can rally back for a back test. That would be your target of the bottom of that level, about 35.33. Otherwise, the market craps out and has that final surge down. If the rubber band snaps, T3 would probably be hit soon, maybe tomorrow. Maybe today, who knows? 31.35 would be that, and then that's another objective level. And the point again, the takeaway of this I'm showing you is not just one thing; it's multiple things that support these lines. I don't think any of these charts that I've gone over in this video so far, or I'm about to go over when I cover the rest of the sectors, I have not modified these lines. They were here well in advance. 56.78. I've had that as nice support on XLC, the communications sector within the S&P 500 for a long time. Was a major reaction high there before COVID hit. Failed at it again, broke above it, back tested for a while, had a bounce, one more check, off to the races. First check since 2020 right here. And so meaning we've now fallen to support, pretty good support, RSI divergence, but no PPO divergence. That's XLC, which is really just a combination of Facebook and Google because they have such a high weighting in that sector. XLY, consumer discretionary. There's your 140, 190 was support back here. I've had that line there for a while, so it's just another sector support. Divergence is getting burned through. This is again more typical bear market action. These divergences not playing out so far. I just have to keep moving the lines. If we keep going lower, we won't have any more RSI divergence. As of now, we don't have the PPO divergence, so I'm going to take that line away. But we are at support. XLI at support, just move the divergence line, still clinging there to support, and it's decent, not super great support, but you can see it capped this level here. We were in a trading range, and then we broke above it, back tested it for a few weeks, and then off to the races. And this is the first back test for a while. So this is where I can tell you that the institutions will be buying if they can buy. What does that mean? Well, if you run a mutual fund or a hedge fund, you might love the industrials right now. You might love Amazon or really like it like I do. Let's say like it. We're in a bear market. I'm not going to fall in love with anything. But if you don't have the money, you can't buy it. So it's all about, we know people are panicking now. We're getting that point where dip buyers have already hit what I believe to be that rut row moment, hey, something's wrong here, what I call point of recognition. So, and then you have your mom and pops that really don't panic all the time on every little pullback, but guess what? This one's gone on for a while, and it's not just how much we've fallen, by the way, guys. I'm going to digress for a second. It's not how much. See, what happened when COVID hit, I've been wanting to talk about this for a while. When COVID hit, the NASDAQ 100 dropped over 30%. S&P dropped about 36%, but it was over in a blink of an eye. In fact, I don't know if things have changed. I don't think so. My early part of my career, I was a stockbroker, and we used to, statements would go out, paper statements, if you have a mutual fund directly to a mutual fund company, not at your brokerage account. You can log on and get those day by day, minute by minute, but see your values. But traditional mutual funds like AIM or Van Kampen or whoever, the American funds, or your 401k statements, and to this day I think a lot still do this. They send out quarterly statements. So where am I going with this? Well, if you blink, you miss this. By the time you got your statement, you didn't know. Those folks didn't know because they were back to with the rally, and well, that one would have been bad. But then they would have saw the news, what was going on TV, and the snapback was so quick. So what happens in a real bear market? Okay, now we've been dropping. So there are two components, I think, to a correction that causes the public to finally break, sentiment to break, and people to throw in the towel and capitulate. Obviously, it's the percentage drop, but over a longer period of time, because all these quarterly statements and monthly, people that don't look day to day like you and I'm sure you do. If you're trading actively, you know what your account's doing day to day. But it's these folks, and there's a lot more of them than us. Folks that just have their money in the 401ks and mutual funds and just look at over those statements. So where am I going? Well, the funds may want to buy. Valuations are great. I hear a lot of fund managers foaming at the mouth, but they can't buy if they're getting hit by redemptions. That's how it works. If you own a mutual fund or an ETF for that matter, and you sell your shares, they have to sell. They have to give you the cash for it. and the cash comes out of what they own. And if that mutual funds typically run about a 3% cash buffer for to meet withdrawals and to have money to deploy into new things, but when they get hit with waves of redemptions, they use up that cash, and then they're forced to sell what they have. What do they have the most of? If it's an S&P 500 index fund or QQQ, they have Apple, and then Microsoft, Amazon, Apple, and all those are their highest weighting, so they have to sell, mostly those. Okay, almost done here. XLP, I have this yellow trend line that started shortly after COVID, and boom, we're right to it right now. Again, I've had this here for a while. I can, you know what I'm going to do? I'm going to actually pull it down. Even though we hit right where it was, I think there was probably a little more downside because I could see some reactions there that I didn't have captured before in these 200 days. So maybe a little more downside in the staples. XLE energy, my thoughts. We shorted it here. It was a setup, then a breakdown. Hit my first target bounce, put in another marginal new high, and still expect the second target to be hit down here. But you have the trend line that's going to come into play as well, most likely. And then the rest don't move the needle too much, but I'll cover them because it just goes with my theme. These, again, level I've had here for a while. On XLU, the utilities, that's 70 is the horizontal support. Kind of got a little head and shoulders action going there, possibly with a left shoulder, head, right shoulder, neckline. So, if we break now, we go down. Otherwise, maybe we can hold, get another bounce here. We're at support. There's a common theme here. Again, I'm seeing so many sectors and key stocks at support that I can't ignore it, and that's why the risk is starting to skew the risk-reward ratio. Even though the trend is still clearly bearish and we could snap, it's starting to skew towards the bullish side because a short covering rally, as much as I love being being short during these sell-offs, when these forced margin calls and liquidations and all that, I love just as much being long on a bull market rally or a short squeeze. Bear market rally, I'm sorry. Bear market rallies are more powerful than bull market rallies. I already showed you this morning when I turned on the pre-market trades, we hit my T3 to the button shortly before the open, and so that counts as a tag. But maybe the REITs want to hit it during the regular session. And maybe they want to go through there and hit my current final target. And if we hit that, and I think there's a lot more downside in this bear market, then I'm going to make my potential fourth target an official target. As of now, that's my current final target, but also as of now, as each target's hit, that's where the odds of reaction are likely. We didn't have much of a reaction my first target. When we hit my second target, we bounced. Then we went there again, had that one little whipsaw, and then had a bigger bounce, broke below the wedge, and now here, well, again, we hit it in pre-market. So that's it. Those are the 11 sectors. No, they're not. XLB, basic materials. This is the last of the 11 sectors in the S&P 500. $79 support, big year-long plus trading range, and that's it. So we're testing the lows right now on the indexes, and starting to crack them on just right there on the NASDAQ 100. Here, I'll show you QQQ. Pre-market, you might not see I have pre-market trades turned off. The futures are right about there, and S&P futures have taken out the lows, but RTY, the small caps, are still hanging in just above. And again, index wise, that's where I'm overweighted because the Russell 2000 hit and is at support right now. So those are my my two top picks right now for longs. I'm looking for more as Amazon and small caps, and then if we can get some type of reversal action today, goes back to those 10-minute charts I've been highlighting, NQ and RTY, take out these highs, then I'll be add to the long positions. If we start going down from here, I'll start reducing and either hold or go flat to cash. I don't think I'm going to chase any more downside on the short side from here. I don't care if the rubber band snaps, because again, I'm going to be on a plane all day tomorrow. All right, guys, I'm going to wrap it up here, get the video out to you before the close. This has been Randy Finney. Oh, wait, no. Never mind. Hold on. One more. Somebody asked yesterday about Bitcoin. I showed them my daily chart, and I just wanted to show you that. Let's see. Was it a 1 year? Okay, waiting for this chart to load here. I think it was this 2-year daily. Here, let me pull up while that chart's loading. Let me pull this one up. All right, so this was it to your daily. Big support zone right here. And that runs from about, was it 29,711 up to 3,800, 30,800. And so it was starting to crack last night below there. And then I have my first target. You can see arrow breaks to note where a reaction's likely. I don't always draw the little bounce, but that's it. 599. I call that 25,600. You can read up on my comments there on that level there. It could be a big margin call triggered if we crack 2100 on a big fund. But here, let me go to the Bitcoin chart for you. There it is. Boom. Hit it because we cracked yesterday. Hit that level and a nice bounce so far. So if you happen to see that chart last night, you could have gained that bounce. Let me show you what it looks like on the shorter term chart because we have some positive divergence there as well. Okay, here's what it looks like for you Bitcoin fans, crypto traders. You got a downtrend line going on the 60-minute chart with a big divergent low. Remember that divergent low coincide with support on the daily. Hasn't popped the trend line yet, but if it does, then I would add maybe one more level here. It's about 3,200. Then there's that gap right there, big level right there to trade. That would be a minimum target right there, 34. 368, and then if it can get some traction up there, 37, 358. And then if it takes out these lows recently, then of course you're going to go down to the next one. It could get ugly. So just want to share that as a potential trade. It'll probably rally if the market rallies, but who knows? Crypto's doing its own thing lately, and just want to share that for any of you Bitcoin traders. Okay, I'll wrap it up here. Got to get the video out to you guys. It's 2:48 p.m. as I'm wrapping up, so it should have time. To get the video out to you, hopefully with enough time to watch it before the close. This has been Randy Finney with Right Side of the Chart. Have a great day.